Somebody is going to make a fortune in commercial real estate. Properties are available, but what about the prices? Well, let's find out. Howard Michaels works to bridge the gap between buyer and seller. He's the chairman and the chief executive officer of the Carlton Group, an international real estate investment bank. Howard Michaels, welcome to the program. Good to have you with us.
Thanks.
So it seems as though there are deals that are happening. In fact, you just concluded a deal, right? 485 Lexington Avenue in New York City. How great is the gap right now between the seller and the buyer in terms of getting realistic on price?
You know, I would say that, as you know, there's not a lot of trading going on in the market right now. You can count on one hand the number of big deals which have happened in Manhattan. 1540 Broadway, Worldwide Plaza, the Times Square deal, and now 485 Lexington. So there is money, but people are very discriminating to spend the money. And it's taking a while for transactions to get put together and to get both buyer and seller to agree.
What about the financing? Is that available if the deal is right?
485 Lex was an anomaly. It was an anomaly in that it had long-term financing. There was 8 years left to go on the mortgage, which is going to be assumed, and it had was 100% occupied, and there was virtually no tenant rollover. So it was a stabilized deal with potentially a lot of upside once the market recovers. Most deals, though, don't have financing. So the transactions I just mentioned all had seller financing, most of which was provided by Deutsche Bank. So if the property doesn't have assumable financing or it doesn't have seller financing, that's why you don't have many deals going on.
So when you look at the market right now, what's the best way to make a deal happen?
Well, the best way to make a deal happen is to find a seller that's motivated. I mean, we represent a lot of overseas buyers. We've been doing this for many years. As you know, we've done many trophy transactions. And the capital is there as long as the seller has the asset priced to market. If the asset is priced to market, a deal can happen because there is capital out there.
Does that capital want to come to the United States?
There's no question about it. You know, we've been really hand-holding investors from all over the world for the last year and a half, walking people through buildings, going through pro formas, looking at trends, reading research charts, etc. And for the most part, you haven't seen a lot of overseas capital deploy here in the U.S. But, you know, kind of what you have going on in the real estate market in the U.S. is you have people who, unfortunately, are losing a lot of money. You've had some major bankruptcies, a lot of property givebacks by major owners. And then, conversely, you have major investors who are taking positions, who are buying banks, making other distressed plays. So it's really very exciting and interesting to be in real estate because of the volatility. The other factor which is happening right now is that you have about $5 billion of capital being raised by some of the industry heavyweights. You know, you have Starwood, Colony, Apollo, who are all hitting the IPO market. And ostensibly, they're looking to buy mortgage debt and to originate mortgage debt. So what I expect to see next year is a $4 or $5 billion of fresh capital in the market, but it's going to be priced much different than the capital who was here before.
All right. Well, we're going to have to wait and see what happens with that. We look forward to having you back to give us an update. Howard Michaels coming in from the Carlton Group, giving us your perspective on commercial real estate.